Hello, everyone. My name is Mark. I am a former market maker. I was the head of trading at a bunch of different hedge funds. I was brought into the industry by the great Mario Gabelli. I worked directly for Steve Cohen. So when it comes to trading, I've been around the block a few times, and now what I like to do is to teach newer people some of the things I've learned over the years, or actually even teach people that have been doing this for a while but haven't been able to really been as successful as they should have been. So I just want to do a quick. Oh, and you can check out our website, stockmarketjobber.com. So today I just want to look at the S&P 500 here. There's really not too much going on as of now. It's what time is it? It's like I don't even know. It's like 10 in the morning, maybe 10:30. But I just want to point out that there's a certain dynamic that you need to understand if you want to be a successful trader. And that's this whole concept of how some price levels are really important and some price levels are not that important. Sometimes we know why they're important and sometimes we don't, but we just need to know they're there. If you try to trade without um, knowing where these important levels are, it's going to be like you're in a town where you've never been before and you don't have a map or a GPS. You're just not going to know your way around. Now look at where S&P or the S&P 500 Spider is trading, right at the 390 level. So this is probably going to make a tradable break pretty soon, meaning over the next few days. For some reason, this 390 level is very important for this security. It was support back here, and then notice it turned into resistance. This happens because of buyer's remorse. There are people who bought back here who regret doing so when the price went lower, and they decide that they made a mistake and they want to sell, but they don't want to lose any money. So they tell themselves, if it gets back up to my price, I am going to sell. So if there's enough of these remorseful buyers placing sell orders, the level that had been support can convert into resistance, and that happened here. Now, why is it not at 391 or at 387? That I don't know. For some reason, the market just likes this 390 level. Now we can see here that what was resistance converts into support. So we went from support to resistance and back to support. This happens for the opposite reason. This happens because of seller's remorse. Investors sell, and when the price goes higher, a lot of them regret doing so, and they tell themselves, I made a mistake. I'm going to buy my shares back, but I'm only going to do so if I could get them for the same price I sold them at. So seller's remorse turns what was resistance into support. We could see it became resistance here again, it became support again. So right now we're sitting right on this 390 level. We're going to break one way or the other. That's pretty much a guarantee. It's not going to stay at this level forever. My guess is it's going to go lower. And if it does, I'd be looking down around here. This is like the 375 level for support. As we can see here, it was support before, and levels that were support can remain intact for a while. Now, why do I think it's going to go down? Well, notice this. We have what we call lower highs. We have a high here, a peak here. This peak was lower, and this could end up being another peak, which is lower. So lower highs tend to be bearish because they show us that as the time is going by, sellers are becoming more aggressive, meaning they're willing to accept lower prices. So again, please check out our site, stockmarketjobber.com. We talk about a lot of things there that we don't hear on YouTube. We cover options, commodities, ETFs, bonds, stocks, cryptos, you name it. Make sure you subscribe and let us know if you like this type of content, and we would be happy to send you notifications. And that's it, everybody. So thank you, and have a good day.